Good afternoon, everyone. It's Coram and Ed Carson with the look at the market for Friday, January 26th, where this week we saw stocks back off of their highs, but we still advanced for the weekend.
Yeah, solid week overall. Big week coming up. I want to take a look at three stocks doing relatively well: Expedia, Novo Nordisk, and Elastic.
Yeah, sounds like a plan. And you're right, a big week for earnings. Coming up, we'll dig into that too. But first, let's take a look at the major indexes on the day. The Nasdaq down a little less than 0.4%. The S&P 500 off slightly less than 0.1%. On the upside, the Dow and the Russell up 0.2% apiece. So maybe is this a market, Ed, at least for the Nasdaq here, that's gotten a little too ahead of itself? Maybe a pause or a pullback is due?
Yeah, but it wasn't like they went out deep in the water and realized, whoa, we're way too far out. It's more like it was just getting extended on Wednesday and sort of has pulled back a little bit. So I think right now we're not extended. If we rallied from here, we probably very quickly get there again. So yeah, we may have gotten just a little ahead of ourselves. And with that, the market had been rallying a little bit on lighter volume near the end of that. And with all the earnings coming up, it's a situation where there was the potential for, oh boy, if things came off. But so that's something to watch out for. But it's not, in some ways I think it was healthy that we sort of backed off, but in a very modest way like this. And it was fairly limited. Yeah, go ahead.
Yeah, no, I'm just agreeing with your analysis, Ed. I think things overall still look very healthy. If you take a step back to the weekly chart, you can see a gain of almost 1% for the NASDAQ on top of a strong couple of weeks.
Yeah, so it's nothing that really was negative. I mean, maybe you could say the NASDAQ closed in the lower half of its range, but honestly, after the last couple of weeks, big moves, and those presented opportunities. Maybe there's fewer right now, and there were some. For those who bought on, say, Monday or Tuesday, some of those stocks didn't do so well. I'm not saying that they can't. Some of those stocks, and Elastic was probably one of those, and we'll get to that. But some of them are bouncing back, some of them are not, and maybe if the market now has got another run, those will straighten out. But so there's some of that, but generally some of this action may end up leading to more opportunities again, like we've had at various pauses along the way in the past couple of months.
Exactly. We'll have to see. Okay, let's take a look at the other indexes. Here's the S&P 500 also extending its gains after finding support at the 21-day line. And with another gain this week, we are continuing to push into new high ground.
Yeah, really wasn't much give back. It actually hit another high today. Energy prices, some other areas outside of tech, probably lifting things in as well. So, yeah, it's pretty strong here. No give back, and there was some more volume on the S&P as opposed to maybe the Nasdaq, which was just starting to lighten up a little bit. So, looking very healthy. The market breadth improved. There was a portion where we were looking a little weak, but now it seems like in this, RSP, those kind of things, just a little bit of improvement this week after looking a little shaky to start 2024.
Exactly. Yeah. On IBD Live this morning, we looked at the advanced decline line for the New York Stock Exchange at GMIAA and Market Smith, now back above that 10-day moving average. So advancers outpacing decliners, and GMIAB, we'll have to see what happens with that when the data from today comes in, but it's right there. So something we're watching closely heading into this big earnings week. Let's take a look at the Dow continuing its advance, and this week getting above 38,000.
Yeah, nice action here. And there's actually some losers. There's some big earnings movers up and down.
Yeah.
So definitely a lot going on this one. Intel was a big loser today in the market, and it still rose. I mean, it's like we had that. I mean, Intel's not the biggest name, and this is a price-weighted index, so this is only a $43 stock, so it didn't have that much influence. But still, to have a name like that coming down, and still having the Dow rally, it's a lot of strength there. And the Russell 2000 also showed some improvement on the other end. It was looking a little shaky for a little bit at the coming down, so had a nice day. Ended several weeks of declines and found support at the 21-day line. So nice to see this. This doesn't have to lead, but boy, it'd be really nice for it to not be falling anymore. If we want to have that kind of rally, have a real sustained momentum in 2024.
Yep, still keeping an eye on that 2000 level for the Russell 2000. And next, let's take a look at 0TNX. Here's the 10-year Treasury yield for the week, edging higher just a little bit, and we're right around some converging moving averages, Ed.
Yeah, I mean, so really the economic data is great. I mean, it's like near perfect kind of situation. Economic growth is solid, inflation is cooling and getting to or below what the Fed is looking for. We got a lot of data next week, including the jobs report. We have the next Fed meeting. The Fed isn't going to do anything, but it may drop hints since March, when a rate cut's going to start, we'll start getting hints about that. This is still favorable for stocks. It's not having that huge, massive tailwind anymore, but this is fine.
Yeah. Okay, let's take a look at some sector ETFs like we like to do. Here's a look at SMH. You mentioned Intel. So SMH off 2.2% on Friday, still managing a gain of about 0.6% for the week. IGV, what about software? We had ServiceNow earnings this week, a lot more coming next week. Microsoft among those. Well, IGV here up 1.1% on the week, now up 3 weeks in a row. XHB, we did get earnings from DR Horton, DHI. So a little bit of a move down in sympathy here at XHB, down 1% for the week, but not totally broken here. Maybe DHI not looking too good anymore, but the overall group trying to hold up here.
Yeah, that it's sort of surprising because they do seem to move together, and there's more than just home builders in this index, but still
True.
pretty impressive that this, because DR Horton I think is the largest home builder, and so for that to be for the ETF to basically shrug it off is pretty impressive.
Yeah. Decline of 9.5% this week for DHI. Let's take a look at XLF financials. How are they faring? Pretty well, I'd say, up 1.9% this week, coming out of a tight area and a 10-week line bounce, Ed.
Yeah, a lot of things. Berkshire, there's banks, some of the credit card companies. There's a lot of things going on in the financials that, if you have lower inflation, stronger growth, it's a pretty good recipe for a lot of these financials.
Yes. And XLI Industrials up 0.8%, also bouncing off of the 10-week after going tight for a number of weeks in a row, Ed.
Yeah, you would hardly know that Boeing was a major component in this ETF. Again, another one. Again, it's not there's only so much weighting in it, but still pretty impressive here. There's some broadening. So XLI, the ETF, and there's travel, which there's not necessarily the greatest travel ETF out there, but those companies are coming out. We'll obviously look at Expedia in a moment. A lot of travel names are doing well. So those are areas beyond tech that
Yeah.
are doing pretty well.
Yes. Well, let's segue there. Let's go to Expedia. Let's explore Expedia. Thursday seemed like it presented a potential buying opportunity for active traders with the stock up 2.5%, clearing a little trend line here, Ed, as it bounces off of the 21-day.
Yeah, nice action there. You could still buy it there or get above this week's highs. If you go on a weekly chart, it was also sort of bouncing this week and maybe last week off of the 10-week line, offering another reason. And now, in a couple hours, this is going to show up as a flat base. So another reason. Again, this is perfect. I mean, really, it ran up. Okay, it's a 20% profit taking zone, but it's even more when you think about from where down to the
Yeah.
bottom of that base. Huge run, and then basically not to give up anything, not really, and pausing right here and starting to move. The volume dried up. I mean, look at us as look at all those skyscrapers. As Arnie Gutierrez likes to say from Market Smith. So nice action there. Earnings are in a couple weeks. We do have a number of other companies, like I think Royal Caribbean out there, but not necessarily direct competitors.
Hmm.
So there are some travel names that'll be reporting before. So there's a little bit of time, but just something to note. But nice action here.
Yeah, definitely a compelling setup there. Let's also take a look at NVO. This is Novo Nordisk, went tight for 3 weeks in a row, now reversing higher this week, up 1% right after touching the 10-week line. We do have earnings next week here, Ed, for NVO. So we'll have to see as this weight loss drug fad or paradigm shift, whatever you want to call it, continues to grow, it'll be interesting to hear what IDVO has to say on the call.
Yeah, I mean, this was really nice technical action. It's not going to be the stock that goes surging all the time. I mean, occasionally it had some spikes, but found support right where you'd like. It was also the 21-day line, got back above the buy point today. You could use this tight area as an additional entry if you wanted to on top of that. I mean, I suppose, yeah, the earnings. One reason I'm bringing this one up, even though it has earnings, is that there's a whole lot of companies, but there's a bunch of Magnificent Five, 7 companies reporting. There's also AMD, but this one is actually sort of actionable or close to a buy point. Most of the others are extended, and wanted to look at this. And there's also Eli Lilly, which obviously is probably going to take its cue to some extent on NVO. It has earnings the following week, but it also reclaimed the buy point today. So these are 2 giant companies. Combined, they're about $1 trillion worth of value there. So a lot of interest there. And also, if you have to think about 2 themes that are this year and last year, it's AI, but it's also weight loss drugs. I mean, probably the 2 biggest transformational technologies out there. So NVO and Eli Lilly, really important.
Yeah. Ed, a little Freudian slip there. Magnificent Five. Who besides Tesla would you kick out?
I wouldn't take out any others. I mean, yeah, Tesla, you could argue to take that out, but no, the other 6 are super.
Sounds good, Ed. Okay, last but not least, let's take a look at ESTC Elastic. Are you ecstatic about Elastic? We are seeing it pull back in here a little bit, but it's still hovering right around a buy zone.
Yeah, and a lot of stocks sort of did this. It was already in a buy zone, and so it was in a little better position than some of these others, where some other stocks sort of peaked out into early entries on Monday, and then they pulled back. We saw a number of them do that. So this is in a better spot. It's not the worst thing because it was somewhat extended from the 50-day line. So if it just pauses a little bit longer, or the 21-day line, but you probably could enter this if it got back above the buy point using today's low or the 21-day line, which honestly by Monday is going to be pretty close to that, as an entry. I'm not sure if Amazon or some of these other names, these big tech giants that may be customers, if they would, if they'll influence Elastic, or just the fact that all these earnings come out and will swing it. This one, look, it has, it has solid revenue growth, really big earnings growth. As you see that it's really swung into profitability, just now, in the last year or so. So that's often a positive, a huge move, sort of like Expedia making that pause now, and seeing if it's there. It wouldn't be the worst of it. It could be that this waits a while or even pulls back and sets up again. So but it's definitely one to watch, because growth of that kind of growth and that kind of technical action means you should be watching it, even if it's one that you don't buy right away.
Yeah, I definitely agree. So you alluded to it, Ed, earnings season. We have major reports that we're going to get with the big tech companies, but also outside of tech, of course. And so this could potentially be a week where we see ripple effects, with results not only impacting these companies that have heavy weightings in the major indexes, but also whether it's industry group wise or even thematically, AI being a key theme there, of course. We could see those ripple effects across the market.
Yeah, I mean, these 5 companies of the Magnificent Seven that are reporting next week, they alone have 10 trillion in market cap. So you combine that, and then there's all the chips, all the software, all, cloud. You could see a lot of swings. So you definitely want to be paying attention to it. Even if you don't own any of those companies, they could have a big impact directly on your stocks or just the whole market. You could see some up and down swings. A bunch are coming out on Tuesday, then a bunch on Thursday. So you could see some ups and downs during that week. So wouldn't be the worst thing if maybe with the Fed on Wednesday, with the jobs report on Friday, and investors might just want to just sort of step back and wait for a few of those days and see how things shake out. It could be that there's a lot of opportunities as a result of this news, but at the same time, you want to be ready with your watch list, but also if things go south, you want to be ready with your exit strategy for individual stocks and your overall portfolio.
Exactly. Man, Ed, you're going to be a busy guy next week.
It's going to be a busy week.
It's going to be a really busy week. All right. And then just one quick reminder for traders in terms of handling existing positions heading into earnings, thinking about profit cushion, and I guess honestly to conviction, whether you want to be locking in some or trying to hold through earnings, looking at the options market, trying to see what sort of move up or down is priced in. How are you going to be handling next week with your personal account?
I generally tend to follow the rule, like if I have a 10% cushion, I generally will hold on to things. And so that's generally what I'm going to be doing. If I'm less, I'll probably take some partial profits in some of those things. I have to look through everything because there's a lot coming in the next week or two or three. So, but that's generally what I do. But it depends. Yeah, it depends very much on your style. It depends on your concentration. Obviously, if your entire portfolio is, say, in Amazon, you know, and you've got a 3% cushion, you might just want to take a little bit off the table. So there's all sorts of things in there. So
Yeah.
yeah, a lot of different factors. That's generally what I do is look for that 10% rule of thumb. And obviously sometimes you can get burned even with that, but that's usually enough that over time that's going to work out.
Yeah. All right. Well, thank you so much, Ed. We'll be watching closely. Thanks in advance for you and your team's hard work next week. That's
Yeah.
it from us for this week, everyone. And we will be back on Monday morning with more on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there Monday morning, 10 minutes before the opening bell, and looking forward to interacting with you all next week. It'll be fun. Investors.com/IBD Live for all the details. We'll see you there. And we'll also see you Monday back here after the close.